Science of Getting Rich says no man is kept poor because opportunity has been taken from him or because other people have monopolized the wealth and have put a fence around it. So opportunity is all around us. The premise, we'll pull this over, of what I just termed over the years the money flow. And the reason I did that, I mean, that name just comes from money flowing in, money flowing out. That's all it meant. And as I began, my study of the markets like 21 years ago, trying to learn to trade, and obviously the internet wasn't really a thing. So I'm buying books, I'm studying, mail order stuff and all this kind of shit, trying to figure out a way to trade. And I'm learning, and first I learned in the futures market. And this chart you see here, this is what stockcharts.com, but each one of these bars is a daily bar. I really don't think you need to change the time. A daily bar is all you need. Are there strategies that trade other time frames? Sure. Especially in the world of Forex. One of the hardest things to do is to take a Forex trader and make them a good stock trader because they have so much stupid shit in their head that it's hard to convince them otherwise. The second hardest person is trying to take a day trader and convince them how to trade. Like, they just can't let go of those smaller time frames. And the smaller your time frame, 1 hour, 5 minute, the harder and harder trading gets. Pillar number 7 is see the big picture. And it's hard to see the big picture when you're looking at tiny, tiny time frames. And so what I figured out as I began to study the markets from various people is, like, let's look, this stock here is Groupon. I've been using this for a training example a lot just because the pattern's been so clear. We'll see this pattern on a lot of other charts too. And this is a perfect money flow pattern. But one thing I noticed is that quality companies over time just go up due to inflation, due to more people buying them, due to the general trend of the market. They just tend to go up over time. And this is a clear example of that. And, it's not always pretty, and not all companies go up, but most companies go up over time. But the way they do it is, they tend to run up and then go sideways and then run down and go sideways and then run up and go sideways and then run down. And you see this pattern of price movement. And, and what I realize is stocks tend to flow together, what I call the wind. So if we were to take this and look at, let's look at the S&P 500, which on stock charts, the pure index is $SPX. This is a pure picture of the S&P 500. And if you look, you're going to see a similar pattern. Now, the patterns, as far as the end of what I call the 4 stages, aren't as clear on the individual stocks, right? But you'll see, even then, the general pattern is up most of the time. So that's a daily chart. But if we back it up to a weekly chart, you're going to see up. Now, why the hell is it doing this? Let's do fill the chart. So same thing, right? So this is a weekly. Now each one of these bars is 1 week. And I've actually met people who trade only using a weekly chart. Think about that. Every week they get 1 bar and they make their decision on that. So if you look at this, and this is super important because if you don't get this, if you don't have a philosophy behind the way you trade, you're not going to stick to it. It's like a religion, right? If you don't understand the basics of the religion, then you're not going to stick to it. Like, you need to understand why things are. But over time, you'll see price, even on a weekly chart, goes up from left to right, right? But in the middle, there's all these moments of panic and sell-off, just like we saw on the Groupon chart. And you have these freak out moments, which, doesn't look like it, but that's 5 weeks straight down right there. right there. That's 5, 6 weeks straight down. And, on a, which means almost all stocks are going straight down for 5 or 6 weeks. They won't all go down, but the general will go down when the market goes down. So if the S&P 500 goes into a downtrend, most stocks are going to go into a downtrend. That's just how it works. And if we back this up to a monthly where each bar now is 1 month, you're going to see the same effect. And we could just keep doing this. We could go to a yearly, we could go to a fucking decade chart, and you're going to see the same thing, that over time, stocks go up. And you could come up with all kind of reasons why they might not, but that's not history. Over time, they go up. And look, that was 6-month sell-off. That's a bear market. There's a 3-month sell-off. There's a 1, 2, 3, 3-month sell-off. 1, 2, 3 little month sell-off. There you go. There's like a 4-week. Oh, here's coronavirus. Now look at this. Remember how crazy Corona was? The end of the world. Stocks are going to end. It's over. Now, a lot of you guys are younger, and you saw coronavirus as an opportunity. Well, if you were a retiree, which I talked to a lot of them, talked to a lot of people older, you probably don't get a lot of the DMs like I get. The number of people who were getting out of the stock market. And I want you to look. That is just a little drip. On the grand scale, pillar number 7, see the big picture. See, if this is why I push that book, The Science of Getting Rich, and I push like looking at the 10 pillars. If you don't have a basic philosophy for understanding how stocks move, then no trading system will help you. There's no fucking point in teaching you to trade if you get scared or if you misunderstand things or even if you're young and naive and think, like you want to see the big picture. You should study the history of the stock market. You ever just go to YouTube and just type in history of the stock market? No, why not? Like, why wouldn't you do that? Like, you should know your own history. If this is the game you want to play, you should know the history. Who are the most famous traders? Why? What did they do? Like, you should study your own history if you want to be good at something. So if you were a person who studied history, when this happened right here, you wouldn't be the dipshit selling your 401k and all that stuff. Those are stupid people. And it's not they're stupid as in they don't know things. They're just uneducated about the history of the stock market. And they think that every crisis, that it's different this time. It's never different. It's always the same. It's just human fear and greed. But the markets always come back. Always come back. So if we know that, that gives us not power. It's like you've heard that phrase, right? Knowledge is power. So what this gives us is a philosophy. We can run this back all the way to 1850. So if we look at that as traders, now a lot of traders, you're stuck on a 5-minute chart. And you're thinking, well, how the fuck does this help us? Well, it helps us big time. Now, it may not help you on a 5-minute chart where the waves can be, massive, but it sure helps me on a daily chart. So the whole point to trading and the whole point to a trading strategy is trying to develop an edge. If you don't have an edge, a quantifiable edge where you can explain to, say, a 5th grader, like why you make money, like why does the money flow make money? Like, what is the reason? What is the edge? Why do you have an edge? And for me, that edge starts with the basic fundamental principle that over time, stocks go up 70% of the time. So if that's true, then now, and you say, yeah, but not all stocks. I know. So we need to avoid the ones that don't go up, right? Which is what? Going to require a little bit of study, a little bit of effort. We want to try to buy the ones that are not only going to go up, but they're going to go up even more. They're going to exceed the market. They're not going to be average stocks. I'm not trying to get average. If you want to get average, just buy an index fund. I'm trying to get stocks that go 100, 200, 300%. Now, is that always possible? No. But when you catch one that goes 3, 4, 500%, it makes up for all those average stocks, right? All those ones that just went average. And as long as you can try to avoid the junky stocks. So this is sometimes like you'll see me say, like, I'm not going to trade AMC. It's not that I don't think it's going to go up. I think it's going to go up. I'm just not gambling. Like, I'm playing to win all the time from here on out, the rest of my life. And one way to do that is to always trade good stocks, quality companies, which means I'm going to miss some that go parabolic, that go crazy. Why? Because I'm trading for life, bro. And so based on that is I trade a philosophy. I'm not trying to gamble. I'm not trying to get lucky next week. I'm trying to get lucky forever, always. And one way I can do that is to ensure that I trade the highest of quality of companies. Does that make sense? And so that means I'm going to miss some things. Some things other people are going to do that I'm not going to do. And I don't give a fuck what they do. Don't care. Don't give a damn about anybody else's the hand they're playing. I can only play the hand that I've been dealt, right? And so what I'm trying to play is not just to make money, but to make money for the rest of my life, which means I need a philosophy and I need a strategy and I need to be able to explain why it works. And one reason it works is I don't buy shitty stocks. I'm not trying to gamble. I'm trying to win for certain. And if I can do that day after day, week after week, year after year, I'm going to compound and compound and compound and compound. And that's why Buffett got so rich. It's not that he knew how to buy Polo or knew how to buy, Hertz when it was going down or Kodak or some dumb shit. It's not that he's chasing money. It's that he spent a lifetime buying quality companies that beat the market. Playing a game that he knew he could win, that the odds were in his favor, and he played that game day after day after day. Right? That's how he won, man. It's not short-term thinking. Seeing the big picture, pillar number 7. That doesn't mean you can't participate in some of those. I'm just trying to explain sometimes why I don't participate in them, because I want to win all the time, okay? And so the older I get and the richer I get and the better at this I get, man, the chasing ain't even there, man. I don't even give a fuck what stock was up the highest, and I just don't even look at that. I'm just watching which sectors are doing the best, trying to find the best stocks I can find in that sector and playing the hand that I'm dealt. Around this idea that stocks move in 4 stages. And so as I began to figure that out, what I learned was stocks moved in 3 stages. Most of the time, people thought stocks moved in 3 stages. They went up, they went down, they went sideways. And they went up, they went down, they went sideways. They went up, they went down, they went sideways. What I began to figure out, it wasn't 3 stages. They really moved in 4. And a couple people along the way confirmed that for me. One was actually a day trader named Brian Shanahan, and he would use the 4 stages on a lower time frame. And another one was a guy named Stan Weinstein, and Stan Weinstein used it on a much larger scale. He used it on a weekly. What I began to figure out is I thought both of them were kind of wrong, that the pattern played out better on single stocks on the daily time frame. And so as I began to look at this, stocks like what we just talked about, Groupon. And what I began to notice as this pattern was repeatable. Now, that doesn't mean I know where stocks are going. Nobody knows where stocks are going. If you think you know where stocks are going, you're delusional, okay? You're lying to yourself. You don't know shit. You have no idea. Nobody does. All we can do is position ourselves. All we can do is play what, statistics. So over time, stocks go up. Over time, good stocks go up as the market goes up. But the market turns down, guess what? Good stocks go down. And so those price patterns and those movements are completely normal. So we have to understand we need stocks to go down so that ultimately they go up. Like this down move had to happen so that it could get up here, because that's the natural flow of in order to eat again, you got to get hungry. Like, you get it? In order for it to be daytime, it's got to be dark. That's how the universe rolls, man. So in order to go up, stocks have to come down. In order for Bitcoin to go higher, it needs to come down, meaning liquidity needs to come out so that there's room for new liquidity to find an opportunity to come in. Because once it goes too high, nobody wants to buy it, because any smart money doesn't want to be the dumbass buying at the high. So in order for it to go higher, it needs to come down. And when you begin to understand that and look at pricing, so a guy like me will come over here and see this, I'm not buying that. Why? I know it needs to come down before it can go up. Get it? And so once you understand that, then you don't need to chase it. Or an IPO. People buying IPOs day one are dumb as dirt. There's no other explanation for it. Those people don't understand the flow of money. You're going to get so many opportunities. So a stock like Airbnb or Dash or any of that shit, they're going to open, they're going to pop, and all the dumb people are going to try to chase it up, and then it's going to go sideways, and then it's going to sell off, And then it's going to start to go sideways, and then I'll step in and buy it. There's no need to chase that shit. That's the natural flow of money. Now, if you don't believe in that, if you don't believe that concept, if you don't have a philosophy of how you do your trading, then you get caught up in FOMO and you start chasing stuff. But see, I don't have that problem because I trade. It's like a religion. So whenever I see stuff like, the RSI, this indicator up here. So what are indicators? Indicators are just little things that are monitoring price, and there's some sort of calculation, and they're giving us just some sort of warning or heads up. Indicators aren't infallible. Indicators can be wrong. They're just one piece of the puzzle. So with the money flow trading strategy, I began to put together what I thought were the ones that made the most sense, that the whole purpose of the indicator was to help me to determine the 4 stages of price movement. Stage 1 is what's called accumulation. This is where stock stops dropping and starts to go sideways. So sometimes people, you'll see a stock going down, well, I'm going to buy it, it's cheap. Yeah, but it's not an accumulation phase. Go understand that word. Go look up the word accumulation. What does the word accumulation even mean? It means people are buying. Well, how the fuck can they be buying if it's going straight down? Nobody's buying that. It's going down. That means there's more sellers than buyers. That's why it's going down. So we don't want to step in until we see accumulation. Accumulation means price stops dropping. And then we have to have some way to determine that. And it's not foolproof, but it's just a way. And so as we begin to look at a way and determine, we could say, okay, are there any indicators that could help me interpret when a price is possibly going to go sideways? Number 1 is just price, the bar itself. So if you have a red bar, red bar, red bar, red bar, red bar, and you're like, hey, I think this is cheap. No, it's not. It's in a downtrend. That's a stage 4 decline. You don't buy that. What would be accumulation? It stops dropping, starts to go sideways. And guess what? You'll hear me talk about prices in the box. So we just went down and now we're in the box. Do I know for certain that's the bottom? No, I don't know for certain. There is nothing certain about the stock market. There's nothing certain about trading stocks, especially. The one thing that is certain is over time it goes up, right? That's the one thing I do know. So as this stock comes down and starts to go sideways, which is exactly what you see here, price was going down, right? And it actually started to go sideways here, so that could have caught you, but we're going to use the actual bottom one. It started to go sideways. Now, and so that became, if you have my newsletter, the whole money flow strategy for all you cheap bastards that maybe don't want to pay for a book because you're just cheap, that's the way you are. You come here and read this. You get most of the philosophy. Now, what you won't get is the important part behind it, like the philosophy and understanding why it works. But so price drops, stops, stage 1. Stage 1 is accumulation. So price is moving sideways. So we need a way to determine that it's actually being accumulated. Well, in order to be accumulated means people have to buy it. In order for people to have to buy it, it has to stop going down. And it can't be 1 day, it can't be 2 days. That's not enough. Anything can happen in 2 days. We need enough days that we can draw a box. And a box at a minimum would be 4 candles, right? 4 sides to a box. It can't be a box with 3 sides. That's called a fucking triangle, right? You see how common sense this makes? And people will be like, well, I don't understand the box. You don't understand how a box works? 4 sides to a box, dude. It ain't that complicated. You need 4 candles. Don't overcomplicate it. Trading is super simple if you want it to be. Now, I have some people criticize me and say, well, you make it too simple. I know, because it is. This shit ain't complicated. Stocks go up over time, dude. Quality companies go up over time. So, and sometimes the biggest question I get, now I'm convinced these indicators don't mean shit if you don't understand the 4 stages of price movement. It is all about that. Well, where's it at? Right there. This is it. It is all about the movement of price in these 4 stages. And understanding the stages, you could do yourself a big favor to just sit and think on these different stages, more so than learning the MACD or price being below the 20. Often people get hung up, well, price is under the 20. Well, it ain't just about price under the 20. If price is in a stage 3 and it's under the 20, but it's still holding the box, It hasn't broke the box. Because once it goes sideways and stays sideways and stays sideways and stays sideways and stays sideways, guess what happens? All the moving averages come together, right? They all come together. And as they come together, maybe this stage 3 just turned into a stage 1. It's organic. It's alive. It doesn't mean it has to go 1, 2, 3, 4, 1, 2, 3, 4. It doesn't mean that. Now, sometimes it will, and it'll follow it perfect, but sometimes it'll break out, run up, start to go sideways, 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 and then it rips higher again. You get a whole new stage 2. So we're not looking for a reason to sell the stock. We assume it's going to keep going up. So whenever I buy a stock, part of my thing is always fundamental analysis. I want to go find a general consensus of how much the stock is worth. A lot of times people make that more complicated than it's got to be. It ain't got to be complicated. You just need to do it the same way all the time. So you just need to find a source that'll help you value a stock. It ain't that complicated. If you went to sell a car, you just go to Kelley Blue Book and you look, see how much your car is worth. And then you wouldn't sit around going, I bet they're wrong. How could they possibly know? Like, this is what people do, though. Like, it ain't that complicated. There's a basic formula of how to value a company. People go to college for it. There's basic finance, understanding cash flows, momentum, potential future sales, and they can come up with basically a price of a stock. There's people that do it for a living. There's companies like Zacks, The Street, and there's freebies like Yahoo Finance. They're probably doing it inside of your brokerage account. There's S&P. Like, there's all these rating agencies. Now, I use one called Tip Ranks, and the reason I like to use it is it gives you a ranking of the person giving you the price valuation. So on Groupon, and we'll show you, I call it doing the dirty. And you say, why do you call it that? Because it's fast. It's not my only research, but it allows me, like if you said, hey, what do you think of this stock? I would just run it through Tip Ranks real quick. There's no point in looking at it if everybody thinks it's not worth shit. Unless you have some hidden inside knowledge, which I really don't. I don't have any hidden inside knowledge. Unless I personally saw something that maybe analysts didn't see, which can happen in life. So you see where they have $30. They say it's overvalued by 5. That means when it goes negative, they're overvalued by 5.8%. So I go down here and look. This dude's a 5-star analyst, right? 5-star analyst. His average return 25%, average return 33%, average return 50%. And look what they all have. Hold, hold, hold. There's a few buys in here. But for the most part, it's, excuse me on there, YouTube. For the most part, these 5-star analysts don't like this stock. So, okay, well, let's go back to the chart. Where were we buying it? If you were in my last boot camp, where did we start buying it? Right here. Why? Because it was $20. Now, if you were going to flip houses, would you buy a cheap house or an expensive house? You see how simple this is? So this is a $20 stock that was worth $30 according to most analysts. Now, here's the funny part. If you know one of my teachings of the money flow trading system is we need a way to ring the register. See, in trading, you have to have a way of taking money off the table. Otherwise, you never get paid, right? And so I didn't devise. Over the years, I tried various methods, various ways. And, you don't have to use my way, but I use my way. So if you showed me any other way, I probably won't like it just because I've been researching for many, many years and never found a way it works better over time. I began to realize that there's a thing called support and resistance. If you notice, if you go look, it's one of the 6 components of the money flow trading system. That would be resistance. There's resistance. Just think of a ceiling. Price hits it, comes down. Hits it, comes down. Hits it, comes down. Okay? What is support? Where price stops dropping. So we see it stopping, stopping, stopping. Now, what we find with this phenomena, and you can do smaller versions of it, right? But you can get crazy with it. You don't need to do that. That's more of a box. These are nuances. But my point is, what I began to notice is a lot of times when price hits it, we could project this line out. When price hits it, it tends to stop. Not 100% of the time, but a lot of the time. So let's look at a stock like Band. Look, when we put this line on here, I want to show you something. This is crazy. See, to me, this is crazy shit. Stops, stops, stops. So what we think was going to happen here? If we're playing a game of cards or gambling, if we're playing a game of probabilities, probabilities are not certainties, they're probabilities. It worked here, it worked here, it worked here. I don't have any reason to doubt it ain't going to work here until it doesn't. So one of the basic ideas of the money flow is what is in motion will continue to stay in motion. Did you read that in the book? Meaning if something's going up, it's going to keep going up. Don't look for a reason for it to go down. So a lot of times people will jump out of trades too soon with me. Why? Because you're not used to winning. See, I'm used to winning. I want 50, 100% returns. So when a stock runs up 10%, you're looking for a reason to sell it. I'm not looking for a reason to sell it. I didn't pick the stock to make 10%. I'm not looking for stocks to give me 10% returns. Fuck that stock. If I'm not going to spend hours researching to get a stock that gives me 10% returns. So there's no point in even doing this game. That's day trader shit, where you're trying to pick up a dollar. That's not what the money flow is. We're trying to get rich. So I'm trying to pick up a $100 move. I want to buy here and sell here. I don't want to pick up a 10%. That's somebody else's game. That's not my game. So if somebody asks me about it, I don't even want to have that conversation because I'm not trying to pick up pennies. So when a price rips out, we would call this stage one. See that box? We'll talk about how to identify the box. But doesn't that look like the pattern I've been sitting there talking about? Sideways, up, sideways, down, sideways, right? So we're seeing the pattern. Now the skill set is being able to identify the pattern. Here's our breakout. We haven't talked about why it's a breakout. Just take my word for it. And price moves up. And guess what? Previous highs, price tends to stop. Not exactly. It's in general zones. Boom. Stop. But notice what happened here. You see that RSI went extreme? Not only did it hit a previous high, but the RSI went extreme. That's a sell signal for me. That's a sell signal. Anytime this indicator goes extreme, 70 or above, that's a sign for me to sell a stock. Take profits. Whenever a stock hits a previous high, that's a sign for me to sell some. Not all of it. I just want to shave it. And you got to come up with what does that mean? Maybe that's 1/10, maybe that's 1/5, maybe that's 1/4, maybe that's a half. Depends on the size of your account. You know, you can adjust it to your own. The idea is you're scaling out of the trade. That's the idea there. Because stocks tend to pull back. Now, you know, you're going to see there's other once we get inside the trade and we're trading inside the trade, there's other things, right? We've got this down here. This here is called the TSI. Not all of your platforms are going to have it, but all of your platforms have the MACD. MACD is basically the same thing as the TSI. You'll notice on my charts I have this it's called a histogram, right? From 8th grade math where you fill in the little chart. So if gas was $88 and then yesterday it was $85 and then the next day it's $87, the next day it's $50, that little thing will start to tick the opposite direction, right? So when it goes below the zero line, this is negative pressure. Sorry, cat jumped up. When this goes below the zero line, this is negative pressure. And when this is above, this is positive pressure. So price is moving higher, right? And you can just look at price and see that. See it? It tends to follow price, right? Well, what that can do is give us a little bit of insight into price movement. It can give us insight into price movement. Now, the main way that I use that is helping me with boxes. What do you mean? Remember when we said a box, it tends to be at the top and bottom. So if you're looking at the money flow pattern, right? Stage 3. This is super important. Super important. And if you don't know what a MACD is or a histogram, just go Google shit. It ain't complicated, okay? These stages, stage 1, stage 3, are exactly the same. The only difference is one's at the top, one's at the bottom. A stage 1 is accumulation. Stage 3 is distribution. Well, what is distribution? You know what that means. If you have a Walmart distribution center, what is that? They're distributing shit. Ain't complicated. Means they're giving out stuff, right? What does that mean? They're distributing shares. There's so many sellers, price can't go any higher. That's all that means. So if we come over here and look at Groupon, man, you see how simple that is? You come over here and look at Groupon, and you say, well, where do you think there's more? There's not more. There's as many sellers as there are buyers, which what? Stops the price. There you go. Distribution. Price can't get any higher. Starts to go up, pulls back. Starts to go up, pulls back. And what does it form? A little box. A little box for price. Price literally starts to go sideways. And you're going to see that at tops, and you're going to see that at bottoms. Now, is it always going to be this picture perfect? No. And when it's not this picture perfect, that's where the indicators can come in and help us. But sometimes it's so picture perfect, you don't even need to look at anything. You can just see it. It's just right there in front of you. Now, notice, whenever you get this, meaning once it goes above that line, you're going to see this green, right? And when it goes below the red line, you're going to see red. Those are often going to accompany, go ahead and start looking for your box. Now, it may push up a little higher. That's cool, but be on the lookout for that box. That box is coming. And so a guy like, I'm not buying there. All this indicator here tells us is that price went too far too fast. It's a velocity of price, the RSI. It doesn't mean it went too high. It just means right now it went too high too fast. The velocity of price. Doesn't mean it won't keep going, but it does tend to mean that that's where price tends to slow down. And you see it over here. It hit it, stopped, but it kept going. That's why, so part of the money flow is we want to understand the weakness in our own system. Meaning if you get all out and the stock keeps going, well, that wasn't too smart. Why'd you do that? So we want to have a contingency that what if we get a runaway stock and it goes up 1,800%? Don't you want to ride that? Yeah. But is it likely to happen? No. So we want to play the not likely to happen and likely to happen both. I want to play both. So that's where I started selling at previous highs. So I would sell. And I started selling some when the RSI went extreme. And then I just let it run. And then people, what about now? No, you just let it run. Like, I'm done even fucking discussing that stock. Just let it run. I'll never even speak about it again if it keeps going up. There's nothing to talk about. So once you have this concept, you know, and like this week I had someone say, like in Polo, well, if I wouldn't have sold any, I would have made a much more. Well, hello, genius. If we all knew that, yeah, we'd all be fucking billionaires. But we can't build a system around rare outlier stocks that happen to run up. Like, you can't build a system around that because they don't all do that, right? So yeah, we sell some on the RSI. That was the RSI. So it hit the RSI. So we sell some. Now, the reason I sell 1/4 is I want to leave more on the table to keep going higher, right? I want to leave some on the table so that it can go higher. And then maybe sell a little bit more down the road. And so, like, this thing was up 50%, right? Now, if you sit back and go, oh, man, I should have done that, I should have done that. So now you're turning a winner into a problem. How the fuck are you going to turn a winner into a problem? You won. Be happy with it. So if you constantly rib on your own self for winning a trade, like you won the trade, you did what you were supposed to do, now you're making money. Instead of celebrating that, you're criticizing yourself. That means your mindset's fucked up, man. It means what you need to criticize is, why are you judging your own strategy? Why didn't you maybe follow the strategy to begin with? It wasn't the stock. The stock did what it's supposed to do. Did you do what you're supposed to do? And if your thought process is, well, I shouldn't have sold any, so what you're saying is I shouldn't have followed my strategy. You get what I'm saying? So yeah, I could look back and go, well, you know, I had 1,000 shares here. If I wouldn't have took any off here, boy, that would have made a lot more. Yeah, but then I wouldn't have had a trading strategy. And I wouldn't be trading for life and making money all the time, year after year, like I've been doing. Right? So we don't trade one fucking stock. We're not trading one stock. We're trading all stocks. This is just one. I don't give two fucks about Pola. It is one stock. You think this is the only stock I'm going to make 400% in? No. I'm going to do it in 20 more stocks this coming year, hopefully. You know, look at bingo, same thing. You could say, well, if I went and sold on the thing, how much money would I have? Yeah, but you did. Like, we have a strategy because these stocks are rare. You don't get stocks that run up 1,800% on the regular, right? Most of them don't do that, man. And so we can't build a strategy around rare, out of the blue stocks. This is why I get mad when people asking me about NIO and fucking Tesla. It's like, dude, come on. Like, can you trade something else? Can you ask me about something else? They're just stocks. They're just one stock among 9,000 stocks. If you develop a strategy and you follow it, then you don't have to ask that question. You get in on the break, you know, and then boom, boom, boom. And a lot of you guys sitting around thinking about GameStop. I should have been in GameStop. No, you shouldn't have. This is a shitty company. Okay? Did it go up big? Yeah. Who cares? Who cares? There were, you know how many stocks went up 50% or 60% or whatever it was this day? Who gives a shit? If you go pick good stocks and follow a strategy and stick to it, you're going to catch these. So you don't need to worry about these kind of stocks, man. So, yeah, I don't know. So the trick isn't following, you know, so you're going to get people, yeah, I call it like whatever, you know, gamblers. I don't have any, let's see, you know, trading buyouts and I digress though, man. I digress. Let's see. So your buy on GameStop was right here, right? Price breaking above the 20 and then right here. Now I want to show you something on this stock. All moves, almost all big moves come from price building a box. You see that? See that? See how important the box is? Super important, man. Super important to your trading to understand the concept of the box. And when you get this concept, you can trade anything. Like this pattern falls on anything. We can go look, you know, let's go look at Bitcoin. Shit. What do we see? We're going to see boxes, you know. You're going to see a sell-off and it goes sideways and then it goes into a box and then it rips higher, right? A little box and then it rips higher. So when you get being able to interpret this, you can trade anything, man. You can trade anything. Doesn't matter. Like, you don't even need to say, what about this stock? Where's it at on the pattern? That's it. That's all that matters, right? Where's it at on the pattern? So if it's breaking out, which would be what? Coming out of accumulation stage, which is what? A box. So if price is breaking out above the box, right? What do you have? You have a stage 2 breakout. What should you do? Be long. You should be long. Should you be long 30 days into the stage 2 breakout near the top? No. Like, I mean, think about it. If you just follow that concept in life, and then you look around for stocks that are undervalued, watching them go sideways, seeing them break out, and then you take a position and you just let it ride, man. So simple. So let's look at, what's that new one we were doing? Let's look at Fastly. Now, one thing you're going to notice on the RSI, not all these indicators are perfect, right? And so there's little nuances. You'll hear me talk about a trade is completed when the RSI goes from extreme to extreme. When it goes from one extreme to the next, I'm pretty much considering that swing trade done. So any profit you have, you might want to get it off, and then you just let it run. So from here to here is done. And notice what happens. It was done. Now, why would I say that? Because most of the time it's done. Like a large statistical time, but not always. So I want to leave it on the table just in case it pulls a GameStop, a Polo, a Bingo, and it just keeps going. Fuck it. Let's just let it ride. Now, if that happens, if you know, so Our box starts right in there, right? In some of the advanced money flow stuff, won't make sense now. Whenever you see the RSI go extreme, I start calling that day the anchor point. And I'm looking for that day to be the top. And if it goes a little higher, then I take it. I'm looking for an anchor point. Anchor point, what do I mean? To anchor the box. It's more important on the bottom. I'm looking for an anchor point. And then if it goes lower, next day is the anchor point. If it goes lower, next day is the anchor point. What do I mean anchor point? I'm looking for a floor. And then I need 4 candles, right, to start to go sideways to tell me this is possibly a bottom. Remember I was talking about that histogram? This is that histogram. Really, all this is telling me is where's the momentum. So if you see price right here was headed up, right? What do you see on the histogram? It's generally sloping higher. So when price went down, what do you see on this histogram? It's sloping down, right? You can see it. Well, what happens when price starts to go sideways? Look, the histogram starts to go sideways. Well, when the histogram turns, going opposite of price, it turns. What is that telling me? The box is formed. I can probably start taking a position. I can nibble, but I have to nibble. And so as I watch the flow of the money flow, stage 1, stage 2 breakout, runs up, stage 4 decline, right? I can start taking my positions. And then the breakout. So if we're looking at the pattern, right? What's the stage 2 breakout? What does it mean to break out? Shit, you know what it means. If you're breaking out of prison, what does it mean? You're on the run, right? You're breaking out. Like, it ain't complicated. Nothing that I'm showing you is complicated. Price is breaking out. Breaking out of what? Out of the box. Out of the stage 1. Out of accumulation. It's no longer accumulation. It is now on the run. It's breaking out. Makes sense, right? What do we see over here? This is Bitcoin again. What are you seeing right here? You got a box. Right? Got a little box there. Where's the breakout day? Above the box. Right there. You see it broke out of the box. There was our box. Now we're breaking out. Now you notice this green line. All this green line is a simple 20-day moving average. Now a lot of people get this and then it's above, below, like they want to sell, like they'd be ready to sell this, except they're completely ignoring support and resistance. Like there's support there. So we don't need to sell it. You don't need to sell it, even though it's below the 20. See the support right there? Like this, we start going into money flow 2.0 there, right? That's a gray area. We won't get into all that, but support and resistance is one of the 6 components, okay? So price breaking out, that's a stage 2 breakout. What do we anticipate happening? Price is going to go high, right? Price is going to go up. Price is going to go up. And what do we assume? I assume it's just going to keep going. It's just going to keep going and going and going and going. And what am I going to do? I'm going to look left. So remember, we're over here now. This thing is organic. We're over here. So when it breaks out over here and runs up, I'm looking left. What am I looking for? A previous box, a previous stage 3. Why? That's going to be my first target where I'm going to sell some. And all I'm doing there is deleveraging the risk. So as the trade goes higher, I'm taking on more and more risk. Risk of what? Losing the money that I've made. So rather than, I don't use trailing stops. I know a lot of people use trailing stops. I don't use trailing stops. I don't need trailing stops. Don't need them at all. To me, that's a day trader Forex thing. I don't need them. The whole point of me downsizing the trade is to deleverage the trade. I'm not getting out of it unless it goes into a stage 4 decline. Stage 4 decline. So like on this day, that's not a stage 4 decline, you know? That's not a stage 4 decline. So I wouldn't get out of that. Look, comes right back. So I'm not looking for it unless it goes into a full-blown stage 4 decline, you know? So that's why I say understanding these 4 stages is so important to understanding how to read these indicators, is we're reading them in context of the 4 stages of price movement. The 5-day, 10-day, these are exponential moving averages. That's super important. And this is a simple moving average, super important. And these are used in conjunction. And on each one of these, like if you have my boot camp or you were in my boot camp, we go into a lot longer detail of what I'm looking at with the 5-day, the 10-day, the 20, or the RSI, support and resistance, MACD, how I'm putting all these together within the 4 stages of price movement when I'm looking at a chart. And once you're doing it, it goes fast. Like you're not sitting there thinking. I mean, it just becomes part of what you do. But on top of that, I'm looking at tip ranks, right? It's one of the places I'm looking to try to determine the value of a stock. Not all sell-offs are going to register an extreme reading on the RSI. Not all of them. The RSI doesn't mean it can't go up, can't go down. It's just giving you a signal that prices move pretty far, pretty fast. If you're a trader and you've had 14 days where prices really run up, that's probably a good time to lock in some gains. Why? So we can take that money. We're playing chess. It's like a football team. You got a running back, you got a quarterback. Not everybody's a quarterback. So we want to take that money, right, and hand it off into another stock. So if we catch a breakout, right, that runs up, and now we're hitting this 70 RSI, we're not abandoning this trade. We're locking in some gains from this trade to roll it into another trade. And so we might have 20, 30, 40, like I have 40 trades going, and almost every day I'm pulling money off of one trade, putting it into another trade. Why? That's forward compounding. I'm trying to forward compound my money into different trades, diversifying, deleveraging my risk as the trade continues up higher and higher. This is another example. See where, right? I'm telling you, this will be one of the hardest problems you have because I get it all the time. The moment it does that, people are, we need to sell it. No, we don't. It's called support. You don't need to sell it. You need to calm the fuck down and wait. This is a box. So this could be a stage 3 that goes sideways that then rips out to a stage 1. If I bought this stock, I would want to know what is the fundamental value of the company. And if the general consensus was this company's worth, let's just say they say it's worth $12 and we're rolling over at $7, well, shit, something's wrong. Why are we rolling over so soon? I want to give the benefit of the doubt to the direction of what we believe the true value is, and the true value is higher. It's right at support. I'm not cutting that trade. I'm not cutting that just because it's below the 20. Yeah, MACD's rolling over. Yeah, history, like all these things are pointing down, but price is holding support. And so if it breaks that, now I got to say, okay, stage 1, stage 2, you see it? Stage 3, now stage 4. But if it doesn't break that box, price is king. We wait, and you see what happens. It became a stage 1 again. Up we go, right? And what happened? Whole brand new stage 3. What happened? Now right there, it kind of broke the box. So you could have got out if you wanted. Definitely could have got out. So let's say you got out and it's coming down, coming down, coming down. What happens right there? It's back in the box. What box? This box. See that box? Now price is back in the box. That's super bullish. It's one of the most bullish things in the money flow trading system. For price to break a box and come back in the box. That was your signal to buy right there. You look down the histogram, it had turned up, statistics had popped out. So you should be back in this. There's your day to buy, there's your day to buy. Not up here like a dumbass. This is where most people want to buy now. Up here at $11 after it's already run up. You see the difference? This is called stalking the trade. So we want to stay with it. This is why you want to stock a lot of the same trades. You're not looking for new trades all the time. You're trying to stock them. So if you trade forward all the time. Stay with it, man. Why? Because it's going to shortcut your studies. You don't have to go research the fundamentals all the time. You know the fundamentals, right? So I've been trading Facebook for, what, 9 years? I don't need to read a lot about Facebook. I know about Facebook. I know how it works. I know the earnings. I know the CEO. I know what they're doing. I know the new, like you only need to spend so much time reading about fundamentals on Facebook, right? So I can just come over and look, okay, well, what do they think Facebook is worth? 327. All right, well, shit. I like my trades to get, if it's a penny stock, I need 50% minimum, okay? Big cap, you're not going to, it's hard to get 50% on a big cap. That confuses people when I tell them I want 50%. You're not going to get that on a big cap. So here's our breakout. Stage 2 breakout. And we're looking, what do they think it's worth? 327. So where's that at? Way up here, right? You know, does it make it there? Nah, previous high is around 295. So if I'm looking at this, my target, remember, my first target's always previous high, which is like right around in here, right? Right around in here somewhere. So is this tradable? Yeah, it's tradable. We didn't really get a box here, but there's your first buy signal. Look, RSI hit extreme. There's your anchor point. 1, 2, 3, 4. You could buy. Everything's turned. Histogram's going up. Stochastics broke out. There's your, boom, you're in it. Where's your target? Around 290. Not a great trade. We're in it. Are you going to get a 50% move in this? No. It's a big cap company. They just don't move like that. So if you're trading small money, I wouldn't even play with this. It's just not worth it, man. And even the options are going to be expensive. Look at H&R Block for just a second. You see the big picture? See what I'm looking at? Now, the pattern's not perfect, but do you see what I'm looking at? Sideways up, sideways down, sideways. See the histogram? Going this way, and what's price doing? Going sideways. What does that tell you when the histogram, MACD histogram, hold on YouTube, when the MACD histogram is going this way, meaning the slope of it is going this way, and price is going sideways, what is that? That's a stage 1. Stage 1 is what? Accumulation. So what does that mean? Shares are being accumulated at about the same price they're being sold. So we call that accumulation, meaning price isn't going down anymore, right? Price goes down during the markdown or the downtrend, okay? This is price going sideways. This is more important than any of these indicators. Learning to read that and see that, right? Learning to read that and see that. Learning to read that and see that. My man asked, what's your definition of small money? If you have to ask, you got small money. So let's see. It's kind of like pornography. You know it when you see it, right? If you're asking, you got small money, bro. Let's see. My point being, so you buy Facebook. Let's say you're trading with a $10,000 account. And you're going to what? How many shares of Facebook you're going to buy? Now, if you're learning and practicing, there's nothing wrong with buying large cap stocks. I'm not saying not to. But if you feel like you have the strategy down, let's look. So here's H&R Block. This is one of my trades of the week. These are trading trades or training trades usually. There's my sideways. There's my breakout, right? Where's my target? Same as always, about in the middle of the previous high. That's a $2 move. So if you put $1,600 at risk, you're going to make $250. This could take a fucking month. Look, I don't know how long it's going to take. It'll take a while, right? That's different than, say, like OVID. Or what is it? Oh, Jesus. Fat finger here. Right? Where you see this going sideways. Today was 5%. If this thing gets to our target up here at $5, that's a 100% return. You're not going to get a 100% return in H&R Block. You're not going to get a 100% return in Facebook. It's not going to happen. It's not going up 100% anytime soon. Over time, it might. You get what I'm saying? So if you're trading a smaller account, one, you need to be a better trader. Like, you have no excuse. You have less money. You need to guard the hell out of that money. You need to be a better trader. You need to take solid setups, right? And you're going to probably need to trade smaller cap stocks. Like, look at a DS. This is one we were trading, right? DS went from $1.20 when we were buying it to $3. Dude, that's a huge percent return. That's never going to happen on Facebook. You're not going to do that. Maybe over a year, 2 years, 3 years. This is in a month and a half, 2 months. So are there risks in these types? For sure. But if your goal is trading, you're being risky, right? Now, if you're first learning, nothing wrong with trading large caps. Nothing wrong with that. But like, you can't trade AT&T. What's it going to do? Go from $28 to $31 in the next 3 months and you make yourself $100? You get what I'm saying? Like, that's crazy town, man. It'll take forever. Where, you want to be looking at stocks like Pola, where you can turn $400 into $2,300. And there's lots of stocks like this out there, these big movers where they pop. And so when you see a stock like this pop real big, I know what everybody's, I'm going to go buy that stock like a bunch of dumbasses. You don't do that. You don't buy a stock that pops real big like that. Like you see here, look what happened with the RSI. What do? You wait. All these stocks go through stage 1, stage 2, stage 3, stage 4. Now you get your chance. Whether it be NIO, Tesla, any of these stocks, they all do this. Bitcoin, all that stuff, all of them. Airbnb. You remember I was ribbing on people, don't buy IPOs. Dude, I got asked about this IPO so much. What about Airbnb? What about Airbnb? No, don't buy it. Don't be stupid. 99% of these IPOs, when they open, run up and then proceed to sell off. So if we can look at a pattern and we can see that almost without certain, if you walked into a casino and they said, hey, I got a game that 98% of the time does this, you would play it. But some reason we come into the stock market, people want to try to be the 2%. So you don't need to do that. So what did I tell people? You drop to the 1 hour chart on an IPO and you wait until what? Hold on, we got to put this in the. You wait until all the indicators appear, just like the money flow. You wait till they all appear, right? And you wait for that breakout, right? Take your position. So if you just insist on playing an IPO, that's how you play it, man. You start on an hourly chart, and then as soon as there's enough bars and everything's set up, you drop to the daily chart, which was over here. So I started trading it on an hourly, waited for the setup. Now we're on to the daily, and now we're trading it. It's 5, 10, 20. Everything's lined up, right? We took profits. Why? Hit a previous high. So that's how we do it. Why are you asking me my thoughts on a stock, bro? I'm trying to teach you how to trade stocks. Why are you asking me? I just told you my thoughts on all stocks. I literally just told you my thought on all stocks. Let's see. But since you obviously either don't listen or just want to take over the class, let's do what you want to do now. Let's do your stock. So we'll stop the class to look at your stock. So yeah, we'll stop the whole class to look at his stock. So what do we see? What do we see? What do you see? Since you stopped the whole class to look at your stock, what do you think of this stock? Let's see. I mean, what do you guys think? Looks like a support level to me, right? So it's definitely not, stuck in a big support area, right? Yeah, it's in support. So what's the fucking question? You're sitting right at support. One of the 6 components of the money flow trading strategy, right? Long ass accumulation. Giant. I mean, we're just boom, 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 boom. What is it? I mean, so what am I going to do? I'm going to come over to something like Tip Ranks, and I'm going to see what do they think about it. Let's see. $24. $24. So we got JP Morgan with a sell. This guy's pretty accurate. But then we got another 5-star with a buy, and he's pretty accurate. Let's see. So our target would be 23, right? Because we don't have, I mean, we kind of had the 4 stages, but it's small, right? 1, 2, kind of got the pattern going, right? It's tiny, though. You see these? See, it's tiny? So, mister, what do you think about Rocket Mortgage? If you learn the fucking system, you'd know what I think about it. So, my first target's going to be 23. Next target, maybe 29, right? Well, is it going to get to 29 when the average analyst thinks it's worth 24? Maybe. It's 24, 22% upside. Let's see. Yeah, I like it here just because it's on the lower end. It's a buy. It's a buy. Is there anything else we can do for you? Let's see. It is definitely a buy. You know, is that a huge buy? Nah. But, I mean, obviously you got a little trading range here. He said, welcome back, Joe. Oh, I'm trying to be nicer, guys. I'm trying to be nicer. So, I mean, that's where we're at. So that's how I would analyze that. We have to acknowledge the fact this is a giant trading range, right? You have to see that. Support and resistance are one of the 6 components of the money flow. And so when you see something stuck in a trading range, I don't like it. Now, I like Rocket Mortgage just because it's on the bottom end, but here's another one. Like, if you see an ugly chart like that, like, just move on. Like, this one's ugly too, to be honest. Look at Facebook. This is an ugly-ass chart, man. It's just above a 20, below 20, above 20, below 20, above 20, below 20, above 20, below 20. I hate that. That is not a flowing chart. That's not a make money chart. You want charts that, let's look at Zynga. We want flowing charts. I want charts that flow down, flow up, flow down, flow up. See what I'm saying? Here's another one on Zynga. A lot of people got out of this stock. You know why? Because they're greedy bastards. They wanted their profits, were afraid of giving them back. Just greedy. Just greedy. Now, why? Because they didn't understand the fundamentals. So if we come over here to tip ranks, and I put in Zynga, yeah, we'll look at space too. What does it say? $12.38. Now, this could have been the top, and I'm looking for my anchor point. If you went through the class just now, we hit the RSI, we took profits, right? So there's our box. Look, just like I taught, we did this one in real time. A lot of you guys traded this one with me. Histogram's going this way. I do exactly what I'm talking about. I buy here, we break out. Where's target? Right around previous high. Bam, right? We sell some. And then what? Runs up a little higher. We get the RSI. We sell a little bit more. Now what? Now we're at half position. We're at half position. And as price starts to go sideways, what do you see? Histogram's going down. Everything's a sell signal, right? Everything's a sell signal. But what do I know? I know that price is actually worth more. Fundamental research, right? So we had this day here where it breaks the box. Remember support, one of the 6 components of the money flow? So we're forming a box. And I always say, all the meth heads, crackheads, they all trade at 8:30 in the morning. This is when all the lunatics are trading. First thing at the open, they're in there on their phones trading. I would highly advise you not to make decisions more so on the sell side than the buy side. And I'm not saying there's not times when you should do it, but as a general rule, you'll see if you're trade with me, you won't get a text from me till about 11, 12 o'clock. And if a stock runs up, and let me just save you some time, runs up and tags the 70 RSI at the open, I'm not selling. I'm just going to wait. Why? Because most of the time, it'll keep going, and it'll go higher and higher and higher, right? So, and I'm not a crackhead, so I don't need to do it at 8:30 like everybody else. Wait, because the professionals are going to wait and see what all the crazy people do, and then they're going to take their positions. So I like to come in, 11, 12, 1 o'clock, 2 o'clock, going into the close, and look what happens. Zynga, that broke the box, came right back in. The single most bullish thing that you can have in the money flow trading system is for something to break the box. So when you're looking to sell it because it broke the box, I'm waiting to see, does it come back into the box? Because if it comes back into the box, it tells me it's going higher. So I'm waiting. I'm not looking to sell if I know the fundamental value is higher. You get how I make that decision? So I'm not just looking at a green line going, oh my God, it's below the green line, I got to sell. I'm not doing that. So we had that with Prague. A lot of people wanting to sell Prague, man. Relax. It's worth more money. So we got to be a little flexible here. Let the box, we've made a ton of money. We took some off. The whole reason for taking shares off as it moves higher is so that you can be patient with the stock as it starts to go through some issues, right? So if we look at Prague over here, which you should have sold some, which is, my guy saying, well, I wish I wouldn't have sold on Polo so much. Well, guess what? If you didn't do that, all your other trades, you would jack them up because you'd be worried. So the reason we sell is so we're not worried. So what do they have on it? $11, 77% upside. 77. So why are people wanting to sell this at $6? Because they don't believe this. They don't believe in the fundamental side of the stock. So the reason when it shot up, we took some off. Look, it hit the RSI, right? Hit the RSI. So we took some off right there. Why do we do that? So that when it does this, we can take it. We can stomach it. We've already taken some money. We're in a stock that's worth way more money. So it pulls back a little, whatever. I'm looking to add, not sell it. Right? Now, if we understand support and resist, now we're going down the deep inside of the money flow, man. Like, look, we start getting over here with these levels. Now, they're not going to hold exactly, but you see it bounced, comes back up. That's the bottom. So when I'm looking at this and you say, well, it broke the 20. Yeah, dude, but it's holding support, and it's worth $11. $6 stock holding support worth $11. Why would I be looking at selling that? I should be looking at buying that. And then look, it rips up back above the 20. What does that tell me? It tells me we're going higher, man. We got a coiled spring. Where's our target? Up here. So I've been adding. Now, could I be wrong? Of course I could be wrong. But if I apply this same idea, this same strategy all the time, this is how I'm looking at it. Instead of getting out of stocks that go down, I'm getting in, I'm going to catch some that just keep ripping, man. So the point of the 20 and all of that isn't to constantly get you out of stocks. It's to help you fine tune the breakout. Like there's your breakout right there. Look, there's your breakout right there. That was our breakout. Sorry, little cat problem. What is this? That's a breakout. Now we still got a little resistance here, but that's the breakout. So we'll see where this goes, man. We'll see where it goes. But the general direction should be higher. Everything's pointing up. So the biggest problem you're going to have when you start trading the money flow is you're constantly going to want to get out of stocks. And you're going to get out and you're going to miss big winners. Constantly going to be trying to get out because the slightest little downturn, you're going to be a crackhead at meth selling at 8 o'clock, 30 in the morning. And then you're going to ask me questions. And I'm not going to answer you because it's 8:30 and I don't trade at 8:30. Look at this one. Solo is set to pop. Price is above the 5-day, 10-day, above the 20. Target, $12. What do they say it's worth? Let's see. Not that much higher. $10. We'll see. So it's not worth that much higher, but it is worth higher. We shall see. I really thought this one was going to rip. So what did we have? Big run up. You don't buy here. You wait for the pullback, and now we're going sideways. They're not predictions, bro. They're price targets based on fundamental valuation. Now, it could take a long time to get there. You can use tip ranks. There's a bunch of them, though. This is tip ranks. Now, most of you won't use this because it costs money. It's like $300 and something a year. Most traders have T-Rex arms. You know, like the dinosaur. Their arms are so small they can't reach their wallet. They just can't reach it. So you'll pay for Netflix, and then you won't pay for a stock chart subscription. That's most traders, dude. Makes me want to punch you in the face. Like you send me a chart, and I can tell you have free stock charts. It's like, oh wow, you must be really serious. Like you're a real serious trader. Don't want to spend $12 on some, you know. Like most people are cheap, man, when it comes to this. Don't be like that when you start trading. You're not going to get, you know, you need these tools, man. If you opened up a restaurant, you would buy napkins and you would have, you know, you would do software like you. If you were going to be doing a business, you would be doing a business, right? Like you would get off, if you got a hot dog stand, you'd get a bun warmer, right? Like you would get the mustard holder. Like you would get all the little shit you need to do business. So if you're going to do business, because if you're not doing that, what you're subconsciously telling yourself is you really don't think, you know, you're just like, well, I don't know, man. So you're subconsciously setting yourself up for failure. Like you don't have charts. You have no excuse not to have charts. They're everywhere. I won't even look. When people send me a line chart, I'm like, I don't even know what you're looking at. Like, why are you even looking at this? Like, why even look at a chart when it's a line chart? So go get charts. The shit is simple. Like, there's all kinds. There's bigcharts.com. Like, there's all kinds of charts, man. But I like stock charts just because it looks the same here as on my laptop, on my phone, on my tablet, at grandma's house. I could come to your house and log in, and it would look the same. I can come over here and take all the stocks that I'm following. Like here's ARK. I click update, and then I can click view all. And look, there's 40 ARK stocks, right? These are the ones in the ARK funds that I follow. And what am I looking for? So look, she already did all the research on these, right? Big sell-off. What am I looking for? My breakouts. So I could just follow all of Kathy's stocks, and when they go into a sell, I start picking them up, right? Oh, look at this one. That was Baba, right? There's our box. We're breaking out. Look, now we're moving up. Look where it stopped, right at a previous high. You see that? Look where it stopped, right at the previous high. That's why I use that to take profits. I probably wouldn't use this one. That's a little close. I would have used the next one. That's too close for trading. A lot of times brokers will give you free charts. Look at CRM, stage 2 breakout. You know, she's in this stock. They already done research. Look at that, support and resistance. There's the breakout. Where's the target if you're trading it? 260, right? So these are stocks somebody else already done the research on. Look at this one. Discover. Man, look at these moves, dude. Look at these moves. This is a this is a good example. Let me show you one. Look at this. The box is broken. Right there, this is a box, right? Runs up, goes into a stage 3. There's your RSI, so you're going to take money off. You would have got in on the breakout, runs up, now it's going sideways. You're going to take some off, right? Actually, I would have took some off here first. Why? Previous high, I would have sold some. Hits the RSI, sell some. You see how I did that? You get in on the breakout, previous high, you sell some because the RSI is extreme. See? And now what? Look, RSI goes extreme and starts going sideways. There's your box. It breaks the box. Broke it. So if I'm trading, I'm out. Next day, comes right back into the box. That is the single most bullish thing in trading. This is why, I don't even know that I would have got out on that. Yeah, everything is negative. Yeah, everything is pointing down. But I know if I go look and I look at the fundamental value of this company and it is higher, I may give this another day. Why? I already sold half between here and here. I've already sold half. This little pullback ain't shit. I already sold some, Yeah, it's on a stage 4 decline, but I'm going to give it a little bit of the doubt. I want to make it go down. Like this ain't enough. Like I'm not scared. I'm not trading scared if I know the value is higher and I've already taken profits twice. Now the reason for taking profits is to give yourself room. So now when it comes down this little bit of couple bucks, I can give it a little room, and then look, next day it holds. You know what that tells me, man? That's positive. And then when this happens, you better put all that money back on and look straight up. And I could show you chart after chart after chart where that happens. That's why if you're trading with me and we go below the 20 and you're like, oh, it's dangerous. Like, should we sell it? I'm like, if I haven't texted you, that's on purpose. That means I'm not selling it. You don't even need to ask me. Otherwise, I would have told you. So there's a reason. Like, there's a reason I'm not selling it because I'm smart. Like, I read, I research. I believe this is just temporary. This is not going to, now if it goes the next day, you got to cut it. You got to cut it. It's breaking. It's going into a stage 4. Going into a stage 4. Drives me crazy though, man. Are we selling this? Did I text you? No, then we're not selling it. Or I'm not. There could be a logical reason for that. This is an ugly ass chart here, DocuSign. Look at this. You see the difference in that shit and that shit and that? You see the difference visually? And that shit. Above the 20, below 20, above 20, below 20, above 20, below 20, above 20. That's a horrible chart, right? Almost impossible to trade it, man. Not with any sort of, that's just some shit you just buy and hold. I mean, I don't know. I can't trade it. Anyway, these are some of her. This is why I like stock charts. You can just go like this. You can sit and go through them all. Put all your stocks in. You just scan through them every day. So like here, I got stocks under. So where are we at? Oh, stocks under $10, right? Ones that I'm following that are under $10. Look, so I'm following every day about 120 penny stocks, right? I'll scan through them. I can go through them fast, right? I've already looked at the companies before I even put them on the list usually. As I come across them, you say, well, how do you find them? Reading. I'm reading Barron's. I'm looking at articles. I see what's happening in the market. I click on things. I go and look and I say, well, like if you go to CNBC and you put a stock in, the CNBC the app, put a stock in it, it'll show you below it the 5 competitors. So if you see, NIO breaking out, you can look down and go, well, who are 5 competitors? Go put in their chart and go see what they look like. Maybe they're a day or 2 behind on the breakout. You see battery stocks breaking out. Go put it, the one that broke out in the CNBC. It'll give you the 5 or 6 competitors. Go look at their charts, right? It's called research. I mean, you're just in a constant state of researching and looking. So like when we did our last boot camp, I created a boot camp folder. And as I took on trades, I put them in the folder. And then we would, look, there were almost 30 of them in here. Remember ABV? We rode that bitch all the way up. That was a good one. Here's another example. Broke the box, came back and then ripped higher. Look at some of these. We killed it. This one didn't kill it, but we're still in it. Some of these were beautiful. Beyond Meat's breaking out. Anyway, I won't keep going, but you see what I'm saying. Just research and study, man. And as you subscribe to shit like Tip Ranks, they're going to constantly send you articles. Like anytime they send me an article and it says 5 penny stocks that could break out, I go look at them. And then almost every time you see an article, though, it's going to be at the very top after a gigantic run up. Why are they doing that? That's just clickbait, man. It's clickbait. Don't buy that shit. You don't buy stocks that are way ran up, straight up. Put them in your folder. So I'll put them in my folder and I'll start to follow them. So, I want to let them pull back, go sideways. And And I'll just start following all these penny stocks, you know. Look at all these. So whenever they write an article, it'll almost always be like this, way up here. This is when they write an article. So then you just put it in here and start following it. So now if we go look at this, what is this? ACB, that's the pot stock, right? Let's see what they think it's worth. ACB. Woo. I think it's worth $8, dude. Shit's trading for $10. What do I do in that situation? If they say it's worth $8 and it's trading for $10 and we go into a sell, I'm probably not giving it much benefit of the doubt. You see the difference there? When I was talking about Prague is estimated to be worth $11 or $12. It's trading at $6. I'm going to give it a little benefit of the doubt. I may give it a day or two, you know. But when they say it's worth $8 and it's trading at a high premium, I'm not going to give it as much room. I can't. It's overvalued, right? So that won't be right every time. But by having this consistency about the way you're trading will over time make you money, man. Yeah, that's not good, huh? Damn. So we got all these little, this one was, it looks like farming. There's your breakout right there. Shit, this one gave you a week to get in. Look at that big ass move. And then what? You sell some up here. Now what? You're just holding it. Man, oh man, oh man. It's like taking candy from babies. Remember this one, Mel? ADTX. I was talking about this one. Did you see that big pop the other day? We were talking about this. I was going to buy it. I didn't. ADTX, right? ADTX. ADTX. Huh, they don't have one. Some stocks they just won't have. That means nobody's following it, man. That's probably why I didn't take it. And you saw the big pop. Nah, man. Nobody knows when the next boot camp will be. Agen is one I've been tracking here. So Agen's breaking out. There's the breakout. Of course, it broke out here. It broke out here. It's had a lot of failed breakouts, right? So it's a penny stock. Let's see what they think it's worth. $8. 132% upside. Damn. That's pretty good, right? Means I should be able to catch my previous high target, 525, you know. Probably lower than that, though. So you see how I'm using that? I'm using technical analysis. We're using fundamental analysis. We're using common sense. We're using price targets with previous high. And no, I would not use this as my previous high. That is nowhere near high enough. You go up. It needs to be at least 20% higher or don't take the trade, okay? So we're using price has memory. We're using previous highs, right, for our targets. You know, the clearest example, let's pull it up here, was like Zynga. So Jesus, if I could type. My keyboard's way in front of me. So we're using a tradable, technical pattern that repeats. So it's a repeatable process, right? This is the key, and I'll wrap up here. It's a repeatable process of finding stage ones, stage threes, stage ones, using the previous stage 3 as a possible target. And then there's our breakout, using the 20-day moving average as a trigger point. It's our trigger. In the book, I talk about the 5-day, 10-day crossing. You don't have to wait on that 5 to cross, okay? In the book, I'm teaching pretty conservative. As long as it breaks out of the box or near the top of the box and closes above the 20, and you say, well, you can tell at 250 if it's going to close above the 20, right? Or it rips. Sometimes I'll jump in at 11 o'clock if it rips above the 20. Just know if you're doing that, it could pull back during the day. But I probably already started buying. I like to buy stage 1 and then go in heavy on stage 2, target previous high, And that's, instead of using trailing stops, that's what I'm doing. I'm deleveraging the trade, waiting on the next stage 3, right? Now we go higher. So that's, the money flow is trying to answer every problem I'm going to have. It's not perfect. It's not perfect at all. And like when we do the boot camp, we get into a lot more of the nuances of the trading. There's a lot of little nuances, and it's not perfect. You're gonna mess it up. It's gonna take you a while to understand fundamental analysis. It's gonna take you a while to get all your tools together. You're not, you're gonna start with charts, and then you're gonna slowly add things as you do things, and as you build out your account, as you get comfortable. This is something you do for your rest of your life. So take your time, lay the foundation. You're not trying to get rich quick. You're trying to build wealth over time, right? So you're going to play this game forever. So the better foundation you can do in the beginning, go. Shit. So that's it, guys. I got to get my butt moving. I don't have dates on the next boot camp. I have the previous boot camp for sale on my Instagram. It's at like half the price of the boot camp last time. The live ones obviously cost more. If you don't have my book, obviously you can pick it up there. If you did any orders over the weekend, I'll get them. Just give me a minute. I'll get to them. Hope everybody has a good week. If I can help you, man, let me know. Click the bio link and go to the newsletter. See the stocks we're trading in delayed time. And hope that helps, man.